Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button and ring the bell so you don't miss a daily interview with a successful real estate investor. Our guest today has completed over 2,700 real estate investment transactions and has invested over $145 million in private equity since 2006, including single-family, multifamily, and senior living assets. He is also a speaker, coach, and the author of the Ultimate Real Estate Investing course. Dylan Borland is chairman and CEO of Borland Capital. Dylan, welcome to Purchase to Profits. It's great to have you on the show.
Seth, thanks for having me, man. It's a blessing to be here, and I'm happy to be chatting with you and your audience.
Yeah, I'm really looking forward to this interview. So to kick things off...
Save that for after, though, because you might regret it.
All right. I'll reserve judgment.
That's right.
So to kick things off, do you want to tell us what your real estate goals are right now? What do you want to accomplish?
You know, that is a good question. You know, I thought about that for a long time now. I think I'm probably in a little bit different of a position. You know, I was reading your show notes ahead of time talking about, you know, what are some of your financial goals and what do you want to hit and where do you want to go now? And Seth, very early on, one of the reasons why I got started in real estate was to accomplish those financial goals. And then I hit those goals at a very young age, and I never thought that would happen. And then I went into this state of just being lost, right? Just not knowing what to do with myself. You know, I didn't think that would happen in my lifetime, let alone at the age in which it did happen. So, and I'm one of those guys that I'm not very focused. I know your show likes to focus on financial success of real estate, but I'm completely opposite. You know, I don't think about that. So in terms of my goals and where I'm at now, and we'll probably talk about in this interview is, I wouldn't say they're financial goals because I've built the portfolio that I was looking to build. I did that in half the time. My goals really now have elevated, I think, above that, and they're focused on more so giving back to people, providing value to people. I find that provides the most amount of joy and passion in my life, though it does have its challenges, I'm finding out. You know, how do you get people to receive your information and process it and do something with it?
Yeah,
that's
do something with it is key.
Yeah. So, but in terms of financial goals, you know, we could talk about those if you want, but, you know, I've kind of hit those milestones and I'm at a point now where I'm focused just 2019 moving forward. Now, listen, everybody likes more money, don't get me wrong, but just kind of giving back and providing value is really worth its weight in gold, you know?
For sure. Yeah. So at what point did that mindset shift to where it is now? Like how far along your process? I know you said you were lost at some point once you accomplished those goals. Is that when you really sat down and thought about it and changed your mindset?
Yeah. So good question. So very early on, you know, I think when you run into success, financial success, you know, real estate I really think it's the number one path somebody can get into. I mean, sky's the limit, right? So you can make $100,000 a year, you can make $10,000, you can make $1 billion. There's no limit, right? I think the only thing that's really changing that dynamic is technology. I think, you know, technology is passing what real estate could do, but technology for the most part is fictionary. It can just disappear. Real estate, you still have assets, right?
Yeah.
And so very early on, you know, you get caught up in the success of making quick money because you can make big money in this space, no matter what you're doing. And then you get kind of caught up into that materialistic lifestyle. Let me have the cars and the jewelry and the fancy stuff. And I did that from about the age of 17 to 25. And then I went through it wasn't a nasty divorce, but I went through a divorce and kind of lost everything.
I know exactly what you're talking about.
Well, and it's good though, because, you know, it helped shift my mindset away from having the materialistic life. Like if you know the Dylan outside of real estate, is, man, I literally, and people think I'm kidding, I walk around and hug trees. See the trees in the background? Like I just, you know, that's me. I have no attachment to financial needs, and it's such more better quality of life. It's such more free quality, you know, freeing aspect when you're not focused on that, on the cars. All these guys, they promote the cars and the jewelry and get a Ferrari in 90 days investing in real estate. And that's not what it's about. So my goal very early on was to get to $1 million. I wanted to make $1 million investing in real estate. And I did that by the age of 25. And I thought that would take a lifetime to do, right? My fix and flip business did $3 million a year in revenue, and then we would net about 500,000 on our best year, $1 million, right?
Yeah.
So I thought that would take a lifetime, and it didn't. It happened very, very quickly. So I was really lost because I did not, like, though I believe that could happen, I guess maybe I really didn't. Like, I thought I'd spend my whole life getting there, and then it happened much sooner. So Seth, I spent like 3 years in limbo, just like a lost puppy, just like complacent and not knowing what to do. And then I met a partner, God, I want to say it was about 2-3 years ago, who kind of kicked me off of that complacency, introduced me to the syndication world. And I said, all right, great. I got a new goal now. But what do I do? Because I'm not motivated by finances, right? Like, I live a very simplistic lifestyle. I live well below my means. I have no debt in my personal life. I have no debt in my business life, right? Outside of the large commercial assets, which we have debt on.
Yeah.
So I said, what do I do? So I said, all right, well, I just tried to make something up. I said, well, let me go out and build a portfolio of real estate that is $100 million in 5 years. So I ended up doing that in 2.5 years. So then I went through another point of sorry.
Oh, no.
Edit that out.
Yeah, it's all good.
I said, what do I do, right? So here I am in this limbo stage, and it just happened by accident. A lot of people ask me how to invest in real estate, how to get started in real estate. We do a lot of coaching and speaking to give back. And I found that I was experiencing very high levels of joy and just real love and compassion, by giving back and focusing on people. And it wasn't until that point, really, early 2018, that I said, man, it's not about the money. Like, I've already gotten the income goals, I've already got the portfolio goals. Like, I live well below my means. So my focus really shifted then to just this one. And look, 2019, that's my entire focus. I've stopped my business. I'm touring the country at my expense, at my cost. I'm going to 24 major cities and teaching people how to invest in real estate at a high level completely for free. And for me, that now 2019, I might get bored of that, and who knows what I'm going to do next. But I found that giving back to people, and I think everybody gets to that circle at some point, right? Where money is just irrelevant. But that provides the most amount of joy and a much better quality of life. So that's where I'm at now. Long story short, right?
Yeah. No, that's a great story. And I know for lots of people, going through that divorce process, it can break them, but the guys who get through it can really come back a lot stronger.
Yeah, I always tell people, I mean, it's, the greatest thing that ever happened to me. It wasn't an ugly divorce, right? It was really kind of, mutual, but it's like, it really kind of resets the bar. It's like a ball, right? And so the harder you throw a ball at the ground, the harder it's going to rebound. And that was absolutely the case, because had I not gone through that was like a shock to my system. Had I not gone through that, I wouldn't have emerged this entirely different person, right? So it's really the greatest thing that ever happened to me, to be honest with you.
Yeah, no, for sure. So how have the systems in your business changed as you're moving towards the goal of reaching and educating, giving back to people? Have you changed your setup at all, or how your business is structured?
Yeah, I get rid of everybody. So, no, I've shifted the business to be much more simplistic, right? Okay. And I think I spent a lot of time studying how billionaires think. It used to be, if you want to make $100,000 a year, hang around the people making 100,000. If you want to make $1 million, hang around the people making $1 million. Then at some point, it's like, all right, well, who do you hang around? And so I spent the last couple of years thinking about how billionaires think, right? And if you look at billionaires, it's a big difference between a millionaire mindset and a billionaire mindset. Mm-hmm. And one of the things that I noticed, I study a lot of guys like Ray Dalio. And one of the things that I notice is simplicity, right? And so in my business, I've really shifted my business from one of, complexity to simplicity. Like I could work from a laptop now if I want to. Like, I'm not a tech guy. Like, listen, like, you could see the folders on my desk. Like, I have pen and paper and folders, but by doing less, we're actually able to do more. And so that's kind of been my focus and my shift, is focusing the business on simplicity so that I can do more. And then I've really gotten keen with the idea of, it takes the same amount of time and energy to do a $75 million deal as it does a $5 million deal. And sometimes a $5 million deal is the biggest pain in the ass.
Yeah.
So I really like latched onto that and realized, like, listen, if I just do one deal a year, the $75 million deal, I do that all year, I'm getting paid 30 times what I would on a $5 million deal.
Yep.
And so, you know, I think we get caught up in this idea, like I was a fix and flipper. I had to be the guy that did 100 deals a year, right? Yep. But 50 of those deals sucked. I lost. I didn't lose, but I broke even, right? 50 of them were profitable. So why? I wanted to be the guy that, you know, you see these syndicators out there, let's have 7,100,000 units, okay? But for what? Like, why not just go out and get one $75 million asset or $100 million asset that's going to pay you all that? Now you don't have to manage 6,000 units, right? Now you don't have to deal with all the complexities of that business. Now I got one deal that I just have to focus on and worry about. And if you look at the billionaires, they're always focused on one thing. Mm-hmm. So my real estate goal going forward is, listen, if I do one big deal, like it's going to be between that 50, like we're working on this $75 million deal right now. That's why I keep talking about it, right? Like, people only need to do one of those in a lifetime. And I think people don't fully understand, like, the amount of time and energy it's going to take me to do and accomplish that deal is the same as syndicating 7,000. I mean, it's like a fraction of that. It's just insane.
Yeah.
So, you know, my business is focused on simplicity, and, you know, we all have the same amount of time and energy every single day. And so I'd rather dedicate my time and energy to things that are going to give me the best return on my investment. It's the same thing. So why not just do it on something bigger?
Yeah. I think that is one of the best messages that somebody can really listen to and put into action, the simplicity and just go bigger. That's great.
Just keep it. We have a tendency to build these big complex businesses and then all the support structure that has to be around it, right? Like, I was there. But for what? Like, the bigger the business grows, you have to keep feeding it. I have to wake up every day and say, shit, how do I fix and flip 100 houses? Or how do I syndicate? Like, for me, I had to syndicate a deal every quarter, right? Like, why? Like, it's such a headache to think about. And so stripping all that back and being focused on keeping it simple is one of the core principles that has helped guide me quite a bit. And I learned that from Ray Dalio.
Yeah.
Just keep it simple. Be focused on the highest and best use. And it's hard for me because I teach people the most logical progression is advanced. Like, start in residential, wholesale, fix and flip, get up to multifamily, do, you know, this. I just tell people, like, listen, like, just forget all of that. Just go right into the $50 million deal. Like, forget it.
Yeah. I love it. So,
but yeah, you know, just, I have this conversation often with people nowadays, and they've built these big complex businesses, and it's just like they want to jump off a bridge. I've been there. Mm-hmm. And you don't need to do that. Just focus on your deal, right? And so it's not about quantity as it is quality. And so I know guys that have 10,000 units and, you know, want to hang themselves. Like, why? Like, what's the point? Do you know how complex it is managing 10,000 units? It's insane. Mm-hmm. So scaling back, that's really what I'm focused on, and just focusing on those big deals, the highest and best use of time.
Yeah, no, that's huge. So looking back with all the deals you've done, is there one that stands out as a keystone deal or one that really made a big impact on you? Besides the $75 million one?
That's the baby one, right? Yeah. No, I did one bigger than that, actually. We did a $100 million deal. Now, I didn't actually get it and close on it, but that was part of the notes I wrote down here. So I know, Seth, you had asked to kind of think about what was your number one deal.
Yeah.
And I really don't think it was a combination of deals. I actually wrote down 3 deals that kind of shaped my mindset, kind of where I'm at today. And each one of them was instrumental in my business moving forward. And so I'll talk to you briefly about them.
Yeah.
And then if you want to get in the numbers, because I think your listeners like a lot of the numbers and details, right? Which is good. I'm a highly analytical, so I will talk your ears off with numbers. Okay. But I really think there were 3 deals that were very pivotal in shaping my mindset. And combined, they've kind of said, hey, this is Borland Capital today, right? The first one was, a property in Ocala, Florida, that this was about 2014. I had to refresh my memory here ahead of your show. A partner and I had, now at this time I was still fix and flipping a lot. I wasn't really thinking about commercial, or I was complacent. I was doing fine, right? My partner at this time said, hey, you got to get involved in, he was actually part of the same coaching program that I was in. And so we did some fix and flips together. And then he said, hey, you got to get involved in multifamily. Check this out, right? And so we bought 2 multifamily assets together. And I'm like, all right, whatever. I'll put in half, you put in half, and great. Well, one of the deals we took through and repositioned, and I won't get into that one, but the one that really taught me a life lesson here was as soon as we acquired one of these properties, about 120 units, we were approached within a week by another investor who said, hey, we got it at such a good cap rate, he wanted to buy it from us. And we said, okay, well, we didn't have any intentions in that. And so that was a time in my life where I accidentally stumbled upon wholesaling. I had no idea what that was.
Yeah.
We took the contract and we sold it to the guy for $400,000. And they took it through closing. I mean, we literally just signed. And at that point, I had no idea. I had never heard of what a wholesaling was, selling a contract. And I didn't think of it very much until after the fact. I was like, holy shit, like we just wholesaled this building.
Yeah.
So I learned that, you got people out there that are wholesaling residential properties, making $5,000, $10,000 checks. So that was a key life lesson for me where I learned, wow, like, I could take a commercial asset, a 120 unit or 150 unit asset, and somebody's going to pay me $400,000 for that contract. Like why? So I talk about focusing on bigger deals. So that was a pivotal point in my life where I said, well, man, I can do one of these versus 70 of these.
Yeah.
So that was one of them. The second one was in 2015. I got the bright idea to bid on a historic Detroit property. It's probably one of the most famous properties in Detroit, the Fisher Building. And it was going up for auction. It's going through foreclosure. That and the Con Building were for auction. I just said, I found out about this. And at that time, Detroit was just like reemerging. Mm-hmm. Still reemerging, but it wasn't cool back then. Now it's cool. But what I raised the capital for that bill, I said, hey, let's just go after this. And the auction was in 60 days. And I learned to raise the capital for 60 days. We raised $100 million for this asset and came runner up on it, right? We lost that $12 million, but I didn't know anything about buying a skyscraper. I didn't know anything about a $100 million asset. And what that lesson was, Seth, was that taught me to think bigger. That just solidified my mindset of, wow, like literally what you focus on, anything is possible. So you got guys that listen to the show and say, man, I could never do, a $100 million asset. You're out of your mind. Well, it's just mindset. Because remind you, before then, I was fixing flipping 100 houses a year. Like I have never tackled anything like that. Yeah. Right. And so I learned in a 60-day window how to raise the capital, how to put the deal together, how to, do due diligence on an asset like that. And that's how quick you can come together. And it's just a mindset thing. So that was the second lesson in life that, kind of taught me, just focus on bigger things, right? And literally anything is possible. If you want to go out and build the Burj Khalifa in Dubai, you can do that, right? Yeah. And then the third one was, where I really learned how to master syndication. So I had never had partners like in a business of mine. I've had joint partners together in deals. But I met a young guy that was working for me that did very, very well. And he convinced me to stop the residential real estate business, the fix and flipping, and focus on multifamily and syndicating. And that's when I really learned the power of syndicating assets together. And that was about, I think, 2016-ish, 2017. And that's when we set a goal to get $100 million in real estate in 5 years and did it in 2.5, right? Yeah. And so that's where I learned the power of syndication. I syndicated 3 deals in the first 90 days, 2 12-unit properties and a 96-unit property. And I can talk to you about those numbers as well. 2 of them we exited from. 1 we're considering an exit now. Okay. Numbers are great. Our goal was not to exit it, was to keep it for long-term cash flow. Mm-hmm. But, I learned, combined with the power of thinking big, combined with the power of wholesaling, combined with the power of syndication, I mean, sky's the limit. It's insane.
Yeah. And well, let's go on and talk a little bit about the 96 unit deal you did. So just because, people watching the show, they always like to know how, you source a deal, any challenges with financing and stuff. So was it a broker deal or did you contact the seller directly?
Good question. Yeah. So I was brought up in an environment where there's a couple ways to make business. And for me, it's prospecting. And so I just turned what I was doing in my residential business over to commercial. And that starts with building a list and prospecting that list.
Mm-hmm.
And so we got on, it's very simple in the commercial game. You get on CoStar, you export and build the list that you want, you download it, and you start prospecting it. And so we prospected that off market. That's how we do it today still.
Yeah.
And that's it. You just dial thousands of people until you find somebody that says, yes, I'm willing to sell under market value.
Yeah, no, that's great. And so when you were in the process of acquiring that asset, did you have any challenges with getting a lender to lend to you because you hadn't had, like you had done some smaller syndications, but not larger ones? Did you have any challenges?
I didn't because, the first thing a lender asks you for is your financial statement and liquidity and things like that. So they didn't really ask me too many questions after that. But I think I tell people this, right? And so people think, I can't go out and get a 150 unit. You know as well as I do. First of all, it's asset-based lending. And so they're really looking on, the asset and can the asset support the venture. It's a mini business. And then from there, they're looking at the operator and they're saying, how competent is the operator? And if they don't feel comfortable with the operator, then they're going to ask you to have a sponsor. So in the syndication world, it's very common. If you don't have the qualification or you don't have the bank account, we sponsor deals ourselves all the time, right? And so I'll get a portion of the deal or a portion of the equity come on as a sponsor. They're non-recourse loans. That only happens in a $1 million plus loan environment. If you're going out after, that with commercial, agency loans and stuff like that, if you're going after the little stuff, the 2 units, 10 units to 12 units, $1 million less in financing, it's like buying a house. They want your blood, they want your DNA, they want your children, sign over your children.
Yeah.
And so that's why I tell people, just stop with all that. Just the bigger deals are actually easier. So, no, I personally didn't have a problem. But remember, I've been in business since 2006. I had a nice portfolio and a lot of experience under my belt. Yeah. Though it wasn't with, an apartment building per se, that wasn't a concern.
Okay. Yeah. And what jumped off of the paper, or I guess through the phone, when you found this property? Like, what attracted you to it?
Well, we have a very good relationship with this seller now, but I asked him, I said, would you be interested in selling the asset? And he said yes. And I said, well, what price would you consider? And at that time it was $4.2 million. Now, I knew the area very well, and this was probably, if he took it to market, a $5 to $5.5 million asset. Yeah. So my only focus at the time was get this person in a contract as fast as physically possible, give them whatever they want.
Yeah.
So
that's a very honest answer.
that was it,
Yeah. Yeah. And was there a value add play there too, once you took a look at the property?
Yeah. So that property, this person had been trading, he has $1 billion in real estate himself, personal portfolio. And so, these tiny little deals for him just gets lost in the cracks.
Yeah.
And they were selling all of their old Class C multifamily properties and putting them into senior living, ground up development, right?
Yeah.
And I forgot your question. What was your question?
Oh, just what was my question? If there was a value add play.
Value add play, yes. So they had forgotten about this asset entirely, and so they haven't raised rents ever. It was built in the 70s. So market rents, now they've gone through the roof, but market rents when we bought it were like $800 a month for 1 bedrooms, $900 a month for 2 bedrooms, and they were still at $600 a month. The property had deteriorated completely. It just needed a full repositioning. The management was terrible. The physical condition of the property was deteriorated. The units, the buildings, rents were at $600, so several hundred below market value. In about 15 months, we're able to turn that asset around and restabilize it. And today we bought it for $4.2 million. We got rents from $64,000 a month up to $80,000 a month.
Nice.
And the asset, we could sell it now for $7 to $7.5 million in 15 months.
Yeah. And you haven't done a refi yet, but you're planning on doing a refi? Is that right?
We didn't do it. Actually, we originally bought this building to hold long term because I hate waking up I come from the fix and flip world, and I just have nightmares of waking up and having to fix and flip a deal. And so if I do the work, I want to do it and keep it. So our intentions were never to sell this asset. But, it's very attractive. If we got an offer at that price, then why not?
Yeah.
But the way in which we structured it, you have to structure it in a way with the financing. So we have a long-term agency debt on that property where we have very heavy defeasance fees, which are early payoff fees. For people who are listening, may or may not know that. Yeah. So we structured it where we'd pay our defeasance fees would drop off between years 5 and 10. If we cash out sooner than 5 years, we have a 5% defeasance fee, which is not, we're talking about $3 million in now equity in this building. It's not a big deal. Mm-hmm. So we could sell it and take that fee. But I don't know what's going to happen. We may or may not. If we got approached and somebody wanted to buy it, we may sell it. But, we structured it with possibly refinancing it between years 5 and 10 because it's a 10-year loan. Yeah. And so that was our original goal, was to wait, then refinance it, and then we would refinance it, return the equity back to the investors. And then, like everybody does in syndication, or most people, return the equity back, and then we own the asset going forward 100%. Yeah. And there will be some profit from the refinance as well too, which is tax-free to investors, and that's another nice thing. So,
and when you first acquired it, obviously management was lacking and the condition wasn't very good. What was the occupancy like? Was it?
Gosh, I think the occupancy was about 90%. So it has pretty good occupancy. Yeah. I mean, shit, you're $300 under market value.
Yeah, that's right.
You don't want to live there. Right?
Yeah.
It wasn't 100%. And the only reason why I think it wasn't 100% is because nobody was paying attention to it. The manager didn't care. People didn't care. So it's just, it was a very bad environment.
For sure. So, with all these deals, with the multifamily syndication, the fix and flips, how has getting involved in real estate really changed your life? I know you spoke a little bit about that at the start.
Well, I think, real estate, listen, let me take a few steps back. When I first started, I got started at the age of 17, and I had a decision to make. I started fixing and flipping cars. And most of my family was in the medical business. And I remember thinking to myself, man, do I go in the medical business where that time I was considering selling these spinal implants. My brother had told me, hey, you could make $500,000 a year selling spinal implants. Yeah. And I thought that was great, right? But then I said, listen, I always wanted to make $1 million a year. And in the medical field, you can't do that, right? I mean, you can, but it's very, very hard. And I think it's even harder today. But then you're capped out. And so, I chose real estate because it would allow me to do whatever I wanted. It's entirely up to me what I want to make or what I don't want to make. And with the financial freedom comes the ability to, help more people, right? When you don't have to worry about, are your bills being paid? When you don't have to worry about your overhead and your basic living, now you can operate from a position of being much more relaxed and really go out there and try to make a difference in the world, however that is. If your difference is just, helping provide people, how do you get, started in this? How do you do that? Is it health? Is it wellness? Whatever it is, but you can relax. And so I think, real estate has changed my life because it allows me to be in a position where I can focus on providing value to people. And that's it, Yeah.
Yeah. No, that's
survival, which I think most people are just trying to survive.
Yeah. No, for sure. And, how does it make you feel when, through syndication, now that you're able to help your investors along the way too? Is that a big part of it? Being able to give those returns to the investors?
It's huge. Yeah. So I never think about myself, right? So, I am up at night. I'm always thinking about other people first, right? So the investors that are in the deal, it's the only thought on my mind is anytime we do a quarterly distribution, I had this overwhelming joy and love, like I can do this for other people and help change their financial situation or provide wealth to them or help them build wealth or cash flow. That's really what it's all about, is that feeling's undescribable to be able to just say, hey, listen, not only did this person trust me with their money, but I can keep producing fruit from this for them, and then watch them how grateful they are and the quality of life it helps improve for them and their families and that type of stuff. So, I mean, it's awesome. It's an awesome thing. Very fortunate.
Yeah, for sure. Well, Dylan, just want to say thank you so much for sharing your story of success with us today. I really appreciate it.
Well, thanks, Seth. We didn't get too wild today, so that's a good thing.
Kept it low key. We'll have to bring you back on in a bit, and then we'll take the gloves off and have some fun.
That's right. Thanks, Seth.
Perfect. And to you, our viewers, I wish you well in your journey from purchase to profits. See you next time.